Welcome folks. In this video we're going to talk about the most and the easiest ICT trading strategies that you can ever find. What we are going to focus on is when a certain setup will form, where, and specifically at what time. We have one being around London Open kill zone, which is in between the 2 to 4 ICT silver bullet window of time. In between that, you will always find a setup. Always. That one I can say you will always find a setup. It is very specific. So in between 2 to 4, and by that I refer to the New York local time. So your trading view should always be set to the New York local time. You look for setups to form in between that period of time. For this case, as you can see, this is the 2 o'clock candle. This is a 15-minute chart for New Zealand dollar and Swiss franc. At 2 is when you start looking for your setups to form. So at 2 you look because there will be a kind of like a manipulation or a Judas swing or a false move, whereby price will always run to a certain direction and then reverse, like immediately reverse. So you must look at 2, exactly at 2. Where is price at 2? So like now, for instance, at 2 we traded down, taking out this low. Looking to the left, you are having this inefficiency right here. So it doesn't mean since we traded into this inefficiency, it was now efficiently delivered, because we have such a gap that is left. So most probably price will always revisit such imbalances. So you look, but most importantly, look at where price is at 2, at exactly 2. So you're being so precise here. So at exactly 2, you're looking for where price is. And mostly what happens is at 2, you'll always find that we have news release, maybe from pound. So it is a very key moment in the market. So look at 2, what has happened. So in this case, we swept sell side below those lows. So if we swept sell side below these lows, who was left? The ones who went short right here. And you can always measure these dealing range, such a dealing range. So what you'll be targeting is either you target a single high, or you target relative equal highs, or relative equal lows, or a single high. Another thing that you could be aiming for is an order block. Say something like this. This is an order block. So you could be aiming for that. So order blocks don't mean that orders, there are pending orders right there. It is only a change in the state of delivery. So like now, for instance, we had this move to the downside, and we had this bullish candle in between a bearish move. So that automatically becomes an order block. So it is not a hit and reverse kind of thing. So we'll always find order blocks being a magnet of price. So you can you can always target those. So either target highs, target order blocks, or inefficiencies, nothing else. So while we were down here, what was left was we had something like this order block, we had this inefficiency, and also we had this. We also had this high. So those could be your draw on liquidity. Another thing you could be aiming for is the 50% of this dealing range. Like you take maybe your fib. Like now, for instance, you take that fib right there, anchor it to from that high to this low. You aim for 50% of that dealing range. So that one is always more likely to get hit. So, and because the lower 50% is a discount and the upper 50% is a premium. So price here we were at deep discount. So price will always seek for a premium for higher prices. So you could be aiming for the midpoint of that dealing range, or anything that is above. Mostly you could be aiming for an order block that is above this 50% or an inefficiency, because that is the only PDRA that is above that above discount, which is a premium. So that is what you ought to be aiming at. So here we had, let me delete this. So here we had this sell-off. So 50% would have been ideal for us to aim for. What is at 50%? We have this inefficiency. So that would have been a good target, and we hit that. So you start looking for your setups prior to London Open at exactly 2 a.m. New York local time. So at 2, we have already swept sell side below this low, and we are trading inside this inefficiency. So what was so reasonable was how could we frame some entries targeting the 50% of such a dealing range and above premium PDRAs. So if you see this, you could be trading into an inefficiency to the left. So always refer what is to the left. It might not necessarily be a low that gets taken out. It might be we are trading into an inefficiency. So you look for that specific thing where and what price is actually doing at that time. So in this case, we swept these lows and we were trading inside these inefficiency. So what was so reasonable was we anticipate, you don't just predict, but you anticipate for a run higher above the 50% in accordance to this dealing range, which we are referring to here. So it is so simple for you to wait for this manipulation, and then maybe this is a 15-minute chart. Now you'll head over to a 1-minute chart and see if at all we have maybe something like a market structure shift, we have something like OTE, we have something like an inversion, fair value gap. So anything that you use as your own entry model is what you look into your lower time frame, because now sell side has already been taken out. And the key thing here is you wait for that specific time at exactly 2. You wait for that. So setups will always start forming from that period of time. So sell side has been taken. What is left is buy side, which is your number one target. So in this case, we had already taken sell side. So the next thing will be for buy side to be taken out. Where is buy side? Above this high, and for trailed stops that were trailed after this down move. So someone might have trailed their stop, or someone might be holding onto this position from up here. So you aim for that. So that is basically it. That is for exactly at London open kill zone. So it might not happen at 2, but maybe it will happen during London open. It might not even happen during London open. It might happen maybe at 4, which is the Asian range close. So you must look for the setups in between that window of time, whereby they'll form. So in this case, that is what London did. Now you look, we head over to New York. Now for New York, basically what happens is London might give us either the high or the low of the day. It all depends with that day, but mostly it will always give us either the high or the low of the day. So it is so important. If London here gave us the high of the day, most likely New York will give us the low of the day. So it is always good to target the London liquidity for New York kill zone. So the New York kill zone is always in from 7 to 10 New York local time. So let me divide these things so that we can see these setups where they form. So okay. So let's do this at exactly 2. We having that 2 4. So this is for London. Always look for this window of time for your setups to form. During New York, we look at from 7, exactly at 7 to 10. Right there. So that's your very specific window of time whereby you look for setups to form. So London 2 to 4, New York 7 to 10. This applies for forex, mostly for forex. For indices and stock market and futures, we anticipate for anything between during New York open and 10, also at 10, because now the future markets always opens at exactly 9:30. So at 9:30 you look for setups to form for futures and indices. But in forex, we always look for setups to form. It is only 1 hour prior to New York open, 1 hour prior to London open. So during that window of time, you'll be in your charts. You don't need a daily bias for that. You just look for, maybe you can start off on a daily chart, no problem. But to be so specific, you don't need a daily bias. You only need that window of time, and always it is so simple to know where price is headed. So if we took here sell side, the next reasonable direction we were to go was to the upside. Where to this high, this inefficiency, and so on and so forth. So during New York open, we had this. We had a run above these relative equal highs exactly at 7. So when we see that, the next reasonable thing to think of is 50% of this dealing range right here. So if you're having your fib, take your fib, anchor it to this low, from that low to that high right there. This will be the drawn liquidity. Mostly it will be, because you will always find that setups the market is in a range bound about 80% of the time. So that means you'll always be looking for a certain liquidity or a PDRA that is so close to maybe a previous session or the previous day. So here we are looking at the previous session, which is London. We are aiming for the London liquidity right here. So it is so important for you to understand that, yes, we took out buy side right there. So the next and the most probable thing will be the 50% of this dealing range. And also maybe something like an inefficiency, like we had here. This is a fair value gap, which got traded into right there. And then we had this reverse. Now, here we have at 7, buy side has been taken. What is left is sell side. For we went long right here. But if anyone was holding to that position maybe, and they had trailed their stops, they could have been taken out. That is what you aim for while up here. So you can see this is an order block right there. So it is so important. Aim for that. And as you can see, we equally hit that very easily. So it is so simple. Just wait for a very specific window of time. For London, wait from exactly 2. Wait for something to happen, and then it will always be most likely you do the opposite. If you are selling here, you buying. If you are buying here, you selling. It will always be something that simple. Now, we have identified this to be the Judah swing right there. Now this is the real move. Now we have something called the power of 3. So we have the accumulation, and then the manipulation, and then we have the distribution. Same here, accumulation, manipulation, distribution. So it is so simple. Every session has its own power of 3, just like we have power of 3 on a daily candle, whereby we'll have something like this, and then the actual move, and then here we have some sort of manipulation. So it will always happen even in between sessions. So we have identified this as the Judah swing and this one. So the next probable thing is going into the opposite direction using your entry model. So now, for instance, if we head over to the 1 minute chart and look exactly how those setups formed, because now we know when they formed, or they are supposed to. Now we have this. So at 2, here is the 2 a.m. candle. We had not yet taken out this low. So that's why I'm saying it is either prior to 2 a.m. or just after 2 a.m. You wait and see what has price done. Now, for instance, we came all the way down, taking out these lows right here, they got taken out right there. So we had a shift in market structure. This is the 2022 mentorship, ICT mentorship. We had this swing high, got taken out right there, and then it left us a fair value gap, which price later referred to. So this would have been your entry. We had this order block. It is a bearish order block, but we went through it. Price will always refer back to such PDRAs. So you could always be going long in that, because you can always inverse these order blocks. If price did not respect such PDRAs here, then if it goes through them, it will always refer back to them. As you can see, that happened right there. Here we also had, as you can see, we had this fair value gap. So the minute it was taken out right there, it automatically became an inversion fair value gap. So it is so simple. There are two entry, there are three, in fact. There are three entry models that are found in this setup. One is using an inversion fair value gap as an entry. Two, we have a shift in market structure, which is the 2022 mentorship, ICT mentorship entry model. We also have an inversion order block right there, which is a bearish order block. So invert it so as it becomes an inversion order block. So there's one, and then fair value gap, and then the inversion. So this will be your entry, your long position right there, and your stop just below that low, and you aim so if we head over back to the 15-minute chart, just a minute. So we take our fib right there. So these, let's mark these as our first drawn liquidity. So let's head over back to the 1-minute chart. So that will be your first draw on liquidity. So you're having that. So if you are to take partials, you take partials above these highs, and then going into break even, and then you hold for your TPs. Also, you could be holding for something that is to the upside, which is the premium. So that is basically what you do. So in between these 2 to 4 time, here we have the New York kill zone. So you have it was so simple. We had this run into the upside, then we had it created us a swing low, and then we had this push to the downside. It left us a fair value gap, but to be very specific, we had an inversion fair value gap right here, which wasn't respected. So most likely price will always refer back to them. So this will be your entry short, and your stop be placed just above that high. What could we be aiming for? The 50% of London You could be aiming for this as your draw. So entry shot right there, your stop just above that high, and then aim for that as your drawn liquidity. So that's it. That's simply it. There's nothing else you need. Those are the two simplest ICT trading strategies that we'll ever find. So it is so simple. Just wait for the right time. So just know that within, maybe depending on where you come from, whether you'll be up during London or you only trade New York. If you only trade New York, this is your setup. If you only trade London, this is your setup. Nothing else, nothing more, nothing less. So I guess that's it. If you have any other questions that you'd like me to answer, just put them in the comments. I'll answer them maybe via a tutorial like this, or maybe just by text. And I guess that's it for today. Until I talk to you next time, be safe.